Hello, welcome to Any Answers Answered for April 2018. As usual, 2 questions from the pages of accountingWEB to have a look at. Our first question this month comes from SkyBlue22, and the question relates to whether a cost of a flat is allowable. Tim, the question here is, a new client's been paying for rental costs for the flat of a director who currently lives in Birmingham and has been for several years. The office is in Essex, so the company is paying for the flat, so the director can be close to the office during the week, then he goes home at the weekend. Is it allowable for corporation tax? And they're saying, I suspect not, seeing as the office is a permanent workplace. Can anyone point me in the right direction? Can you, Tim?
Yes, and the questioner, SkyBlue22, presumably a Coventry fan, in his question uses the phrase permanent workplace, which seems to me to indicate that he's thinking more of the expense allowance rule for employees. Would the travelling costs from Birmingham to Essex be allowable? Answer no, because it's not a temporary workplace, it's a permanent workplace. But that's a complete red herring when it comes to the deduction for the company. And the clear and simple answer to the question is that yes, it is corporation tax deductible for the company. It's an expense that the company has decided to incur in order to make the life of that particular director easier in terms of the work they're doing for the company, and that clearly is incurred wholly and exclusively for the company's trade, and so there's no doubt that the company is entitled to corporation tax relief on that rent. But it does raise other issues, the first of which, of course, is the benefit in kind, and that's what the first answer to the question from Kevin McSee makes clear. I don't think corporation tax is the issue here. You should be able to get a deduction, no problem. What it looks like you have, though, is a benefit in kind issue. And yes, I'd agree that almost certainly there will be a benefit in kind. A
lot of people talk about work-related accommodation, and that's being an exclusion, but this just wouldn't.
No. I mean, the work-related accommodation is in very limited circumstances, job-related. If it's for security reasons, or if it's necessary, which it isn't here, or if it's customary and for the better performance of the duties, which it wouldn't be here.
I've always said vicars and lighthouse keepers tend to be in that sort of position. Yeah.
A further query raises the question of whether the lease is in the director's name. So if the director personally has signed the rental agreement and the company is paying it, then it should be going through the payroll as settlement of his pecuniary liability. So that's a good point. We'll disregard the comment that says providing accommodation so that someone doesn't have to live in Birmingham may be seen as charitable expenditure, as somebody who lived in Birmingham for 3 years and much enjoyed it. I think that's a little harsh. And then there's a question, what was the cost of the flat? And if it was purchased before 1st of April 2017, what was it worth then? Well, what's that got to do with the price of fish? Answer, annual tax on enveloped dwellings. But actually it's clear from the question that the company does not have a major interest in the property, and so ATED wouldn't apply here. But there's one aspect to this that no questioner, or no poster rather, has mentioned, which is why I think it's worth us developing it, and that is, might this impinge on the director's entitlement to main residence relief in respect of his own property, assuming it's a he, it may be a she. So let's just consider that for a moment. Suppose that this is a single person living in a flat that they own in, let's say, Harborne in Birmingham, which is where I used to live, and they live there at weekends, but Monday they go to Essex, stay in the flat in Essex until Friday evening when they go back to Birmingham. Now, as a matter of fact, which of those 2 properties is their main residence? And it could well be that the answer is the Essex property. It doesn't matter that they don't own that property or even rent it themselves. The company rents it. It is still their residence. Lots of people live in rented accommodation. It still is their residence. And that would mean that absent a nomination, the revenue might at a later date say, well, for the period you were living and working in Essex, the Essex flat was your main residence, the Birmingham property that you own wasn't your main residence, and that upsets your entitlement. And so the director here should be advised, to put it beyond doubt, to nominate the flat in Birmingham as their main residence. Of course, if it's slightly different, suppose that the director's family lives in a house in Edgbaston and the director stays there at weekends, Friday, Saturday, Sunday night, 3 nights a week there, 4 nights in Essex. I think as a matter of fact, the Edgbaston home would remain their main residence. But for the avoidance of doubt, I'd still make the nomination. So an interesting question.
Very interesting, and an awful lot of different tax areas to think about. Funnily enough, the corporation tax is the one we don't think is a problem. It is the employment tax and also potentially capital gains tax that we would need to watch out for. Our second question this month comes from Superfletch, and Superfletch is clearly a very generous employer, is paying £500 a year for individual members of staff to park near the office. And the question here is, how should the tax be dealt with? Is this a benefit in kind? Is it something that he can write to the revenue and say, well, please don't tax my employees on this, we will deal with the tax charge on their behalf? So Tim, is it a settlement agreement? Is it how would we deal with it? My gut feel is it's an exempt benefit.
Well, that is the first point, and indeed the first responder to the question, Portia Nina Levin, says that why hasn't your accountant told you that it isn't taxable? Assuming that it is an exempt benefit. Now, fundamentally, parking at your workplace is an exempt benefit. However, as David Heaton, well-known NI expert, then pointed out, the new optional remuneration arrangement rules that came into effect from 6th of April 17 might in fact mean that there is a taxable benefit. And it may well be that the company has a policy of saying to staff, if you drive to work and you want to park at the local NCP and it's going to cost you £500 a year, we will make the payment of the £500 to NCP or whoever it is, but we will reduce your salary by the £500. And that might be their policy because they'll have employees that come to work by public transport or bicycle or whatever and don't have that cost to meet. And so it would be unfair to give a benefit to some but not to others. So they may be doing it on a salary sacrifice basis. Now, if that's the case, it does then require us to look at the new optional remuneration arrangement rules. And basically, since April 17, we have to take the higher of any cash alternative or salary foregone, or the taxable benefit under the normal principles. And in this case, that would be the higher of, let's say, £500 if that's the salary sacrifice figure, or 0 being the exempt benefit figure. So that would then require a taxable benefit of £500 to be reported. However, there are transitional rules under the optional remuneration arrangement regime, which in fact David Heaton did then go on to point out. I was just checking it had been mentioned in the posting. And if the parking benefit was provided before 6 April 17, but it won't become taxable until 6 April 18. So for the tax year 17-18, if it is on an optional remuneration arrangement basis, it'll remain exempt as long as it was provided to that employee before April 17 rather, but from April 18, if it's on a salary sacrifice, it'll become taxable on that basis. So we do need to take some care in exactly how that's dealt with.
And one thing to pick up on with optional remuneration arrangements, your example was the idea of a salary sacrifice. It is worth appreciating any remuneration arrangement with an option would cause a problem. So if in fact they had said you can either have that we'll pay for the car park or we'll give you an extra £500, that equally applies. It's not that they have to have given up £500.
Oh, that's right, yeah.
So in both directions. So we do need to watch out for that. And presumably if there was then a benefit, there would be a mechanism through the revenue to arrange for the tax bill to be picked up by the employer if they wanted to do that.
And just going back to the new legislation for optional remuneration arrangements, certain exempt benefits aren't caught at all. And so childcare vouchers and
ultra-low emission cars,
ultra-low emission vehicles and cycle to work exempt benefit and pension contributions remain exempt even if provided on some sort of cash alternative salary sacrifice basis. But other benefits that might be exempt, for example, provision of mobile phones and here workplace parking, those are caught by the optional remuneration arrangement rules.
Absolutely. So we would have to deal with the optional remuneration arrangement rules. However, in theory, again, it's a bit like the first question, a relatively simple question, but the optional remuneration arrangement rules create new problems that an awful lot of people simply won't spot, and therefore we need to be alert to them and try and deal with them ourselves. Hopefully useful to both questioners and various other people as well, and we look forward to looking through the pages and finding another question, 2 questions, next month. We'll see you then. Bye-bye.